Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for the indices. We'll also be discussing on the key sectors and stocks that should be in focus. First up, coming to the updates in trade yesterday in the global market. In yesterday's trading session, the US markets witnessed a mixed performance. The tech-heavy Nasdaq recorded a fresh all-time closing high, while the Dow ended lower 0.6%. The S&P 500 has ended on a relatively flat note, and it is still oscillating in a narrow range. Going ahead, the zone of 5,340, 5,360 will be the crucial hurdle for the index. Any sustainable move above the levels of 5,360 will lead to a sharp upside rally in the index up to the levels of 5,420, followed by 5,500 levels in the short term. Coming to Brent crude, so Brent crude has witnessed an upside rally in yesterday's trading session. It has ended above the 84 level with a gain of nearly 2%. Currently, it is hovering around the crucial resistance of 84.50. Any sustainable move above the levels of 84.5 will lead to an extension of the pullback rally up to the levels of 86, followed by $89 a barrel in the short term. Looking at the dollar index, so DXY is oscillating in the range of 104.7, 104.8 since the last couple of trading sessions. Any sustainable move on either side will lead to a trending move in DXY. Now coming to the update regarding our markets. So in trade yesterday, as the days of the exit polls and elections are nearby, Nifty has witnessed profit booking from the higher levels. It was the second consecutive session where the index witnessed a bit of profit booking. It has ended below 22,900 level with a loss of 0.19%. On the daily scale, it has formed a bearish candle carrying a lower high and lower low as compared to the prior candle. Currently, the momentum indicators and oscillators are suggesting waning upside momentum. So if we see, the daily RSI has marked the lower low for the third consecutive trading session, and it is about to give a bearish crossover. Most noteworthy, the daily stochastic has already given bearish crossover, which indicates limited upside at the current juncture. So on the derivative front, if we see, the May futures have dipped by 0.19%, and the cumulative open interest of the current, next and far series has also surged by 0.73%, which indicates minor short built up. Among the constituents of the Nifty index, 6 stocks have witnessed long built up in trade yesterday, 13 stocks have witnessed short covering, while 12 stocks have witnessed short built up and 19 stocks have witnessed long unwinding. If we look at the option data, 23,000 strike has significant call open interest, followed by 23,100, while on the put side we have 22,800 which has significant OI, followed by 22,700 strike. So going ahead, the zone of 22,730, 22,780 will act as a crucial support for the index, as it is the confluence of the 23.6% Fibonacci retracement of the prior upward rally, that is from 21,821 towards 23,110 levels, and it coincides with the 5-day EMA as well and the prior two swing highs. So that would be the crucial level to watch out for. Looking at the current levels, we see that resistance on the upside would be seen at 22,950, 23,000 levels, and any sustainable move above the levels of 23,000 would lead to resume its northward journey in the index. Now coming to Bank Nifty, so Bank Nifty in trade failed to sustain above 49,500 mark and thereafter witnessed selling pressure. It has ended below 49,150 with a loss of 0.28% in trade yesterday. On the daily scale, if we see, it has formed a bearish candle. The momentum indicators and oscillators are also indicating limited upside at the current juncture. If we see the derivative data for Bank Nifty, so Bank Nifty May futures has dipped by 0.23% yesterday, and the open interest for the next FAR series has current FAR series has surged by 4.51%. That indicates short built up which is being seen in the index at the current juncture. If you look at the option chain data, 49,300 strike has significant call open interest followed by 49,500, and on the put side we have 49,000 which has significant open interest followed by 48,500 strike. So going ahead, based on the OI data, we see that 48,700, 48,800 will act as the immediate support for the index. Any sustainable move below the levels of 48,700 will lead to further selling pressure. While on the upside, the zone of 49,450, 49,500 will act as the crucial hurdle for the index. Now looking at the key indicators of the market, so we have volatility index India VIX, which has continued to trend higher from the past few sessions and has ended about 24 levels with a gain of over 4% yesterday. Going ahead, as it is trading above the levels of 21, it is likely to continue its momentum towards 26 followed by 29 levels in the short term. If you look at the advanced decline ratio, it has tilted in favor of the declining stock. So that's been the trend in the past few sessions, where the decliners, even though the markets have surged higher, there has not been broad-based participation in the current rally in the markets. So if you see presently within the Nifty index, 78 stocks are trading above their 20-day EMA levels, witnessing a minor dip from 88% on Thursday. This shows selective stocks have witnessed profit booking from higher levels in the past few trading sessions. Now looking at the key sectors, so among the sectoral indices, we have Nifty Auto, which is forming a bullish pennant pattern on the lower time frame, that is on the 30-minute chart. So going ahead, the zone of 23,970, 24,000 will be the immediate hurdle for the index. Any sustainable move above the levels of 24,000 will lead to a sharp upside rally in the index. If we see the rest of the counters, we have Nifty CPAC and Nifty PAC have witnessed profit booking after the sharp upside rally that we have seen. So there has a bit of cool off which is being seen in few of the indices. Now coming to the FI DI data, both FIs and DIs were net buyers yesterday to the tune of FIs were marginal buyers to the tune of 65 crores, while DIs were buyers to the tune of 3,231 crores. FI long short ratio for index futures has further improved to 53.96 on a net basis. This as they bought 25,397 index futures. On the stock futures front, FIs have bought to the tune of 62,097 contracts, while on the options front, FIs bought 57,482 call contracts and simultaneously purchased 45,024 put option contracts. So that's it from our end. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.